Ladies and gentlemen, welcome back to the channel. Today is a very big day because GME will be reporting earnings, and GME earnings will affect, obviously, GME, and I expect a very big up move or a down move. Now, naturally, I tend to be more bullish than bearish on these names, so an upside move is kind of what I am expecting. Now, we're going to get into the latest up-to-date data on not only AMC, but GME as well. We're going to take a look at what's happening in the marketplace today. And I do have some trades on these names as well. So I am putting my money out on the line. And one of the things that I can tell you right off the bat is cost to borrow fees on both of these names are soaring heading into their earnings. So let's get into all of this information. Boy, do we have a lot to cover. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. So first things first, with AMC stock, AMC's live short interest of free float 21.86%. We know this is a lot higher, and we know market makers, they have a very large short position on AMC because of those deep in the money options that we have seen bought over the past couple of weeks. This has forced market makers to short AMC stock. If GME gives AMC a reason to rally, as they typically do move in sympathy, they don't have to, but they typically do, well, that's going to mean market makers are going to have to go out and buy a lot of shares of AMC very quickly, and that could make this sympathy move a little bit bigger. Now, I'll just say one thing. The options on AMC, they're priced very cheap. So I do personally have a trade on AMC for June 16th. If you guys want access to all of my trades in real time, link down below in the description of this video. We did just make a trade on GME as well because I think it's going to be a big up move or a big down move. There's really one big factor that's going to determine if GME goes parabolic or not, and we'll talk about that here in just a few minutes. Now, the short interest total on AMC, around 35%, including those market maker shorts. And like a market maker, they just buy back the stock if the price of the stock does go higher. So there's not that emotional factor to say like, hey, if hedge funds don't want to cover, then they don't cover. No, market makers, it's all based off price action. So I think that is pretty exciting with AMC specifically. Now, if we take a look at the cost to borrow average, that is at about 69%. Cost to borrow max, 269.5%. Cost to borrow minimum sitting at 50%. Interactive Brokers has a cost to borrow fee on AMC stock at 64.3%. So the cost to borrow max surged from 134% yesterday to 269.5% today. A massive increase here. Expecting, obviously, a lot of volatility. Now, if we take a look at the option activity, and doesn't look like we're getting too much coming in so far, but really into even the close yesterday. Look at all these $10 puts. All of these, all $10 puts. These trades are 600,000, 300,000, 700,000, 700,000. Another 700,000, 600,000, 600,000, 300,000. Very large orders. A $1.21 million trade right there. 3 more $600,000 trades. Another $574,000 trade. So there are very large positions. So you're getting more of that even yesterday, and I'm sure you're going to get that here today as well. Now, if you look at AMC, Ortex says AMC is more squeezable now than it has been in a very long time. The short score is 93, and that is because the days to cover continue to increase. The days to cover is 7.78. 3 months ago, it was 5.16, and 12 months ago, it was at 3.5. So what days to cover really means or is telling you is there is low volume. There is low activity. And that ultimately means that if volume heads into the stock, it's going to affect the stock a lot more. Rather, imagine it like this. If AMC has 50 million shares that trade hands on any given day, if you get 2 million shares that cover, I mean, that's going to bullishly affect the stock, but it's not going to be a huge deal. Whereas recently, we're seeing 10 million shares trading hands in a day. If you get 2 million shares that cover, that's going to probably increase AMC 20% or more in that single day. That's the difference. That's why days to cover is so important. It's all off of the relative volume. So that is important to know. Now, if we go ahead and take a look at GME as well, since we are going over the Ortex numbers, there's an article I also want to talk about specifically with GME earnings. But let's run through the data here first. So if we take a look, the short score is the 89. You got $1.36 billion worth of short positions on GME. Estimated short interest of free float at 20.5%. Free float out on loan 28.21%. Shares out on loan 75.35 million. Days to cover 16.7, so much higher than AMC, and they really just have super low volume as well. And I expect volume to come into the stock, whether it's bullish or bearish. That's what's really going to give you a big move. Days to cover at almost 17 shows that there's like no volume on any given day compared to the short position. Now, live short interest of free float at 21.17%, almost comparable, almost similar to AMC's legal short interest as well. You got about 56.5 million shares that are currently sold short, and I think this makes it for a much more volatile catalyst, right? With GME's numbers this high, it's been a while since GME numbers were this high heading into an earnings event. Now, cost to borrow average sitting at about 10%, cost to borrow max at 18%, cost to borrow minimum at 7.6%. Interactive Brokers has a cost to borrow fee of about 7.5%. And if you take a look at the option activity, it's been very bullish with GME, right? We've kind of talked about this before. The last week, you have seen a positive order value of 84%. You have seen $1.68 million worth of orders come through for GME, and I expect this to ramp up into the close of the day today. Given there are so many short positions on GME, it looks like some people are going to want to hedge out some of those short positions. If you're massively short on GME heading into this earnings, that's just a bad strategy. You have to have a hedge to that because GME could surge massively, and we'll talk about where these two names could go here in just a minute. Now, this article is from The Street. It says GameStop Q1 earnings, another net profit could make the stock go parabolic. And this would be the second net profit in a row. Now, you're expecting earnings to be 77% higher, or 77% growth year over year. You're expecting GME's number to come in at negative 12 cents per share. So if that can be positive, well, that's really what's going to affect the stock in a positive way. And it goes on to say that they have been negotiating better terms with suppliers and vendors and acquiring full console cycle allocations are other initiatives that the company plans to meet its long-term profitability goals. They also go on to say that just cutting cost in general, inventory, just hours, cutting employees, stuff like that has really kind of helped the company as of recently. It says the company also enjoyed a good inventory write-down, with GameStop reporting $682.9 million in inventory versus $915 million a year ago. Thus, because revenue expectations for Q1 remain roughly in line with what GameStop reported last year, the company's continued cost-cutting initiatives may be key to net profitability. And why GameStop could go parabolic. Last quarter, GameStop caught bears off guard by reporting earnings per share EPS of 16 cents. Analysts had projected the video game retailer would post a loss per share of 13 cents. GameStop's unexpected profitable quarter caused GME shares to soar about 50% after the earnings announcement. Last quarter, one of the few analysts covering GameStop, Wedbush Michael Pachter, provided a $6.50 price target for GME with an underperform rating. Pachter claimed that shares were at trading levels that are disconnected from the fundamentals of the business due to irrational support from some retail investors. Although GameStop shares are still trading 40% higher than where they were before the previous earnings release and is 73% above the Wedbush analyst target, Patcher has reinforced his bearish thesis for Q1 earnings and left his price target intact. Holiday sales largely contributed to GameStop's fourth quarter net profit, making it questionable whether the video game retailer can pull off that feat for the second quarter in a row. But if GameStop does report a net profit in Q1, it will be a catalyst for the stock's retail investors to drive share prices higher. Currently, short sellers hold about 21% of GameStop's outstanding shares, and that would be short. So there you have it. The DRS numbers as well. It says, besides a potential second consecutive quarterly net profit, GameStop's shareholder base is looking forward to another piece of information. The number of GME shares registered with ComputerShare, the company's transfer agent. In recent quarters, GameStop investors have increasingly registered their shares directly with ComputerShare via the direct registration system. With this service, shareholders do not need to hold shares through a broker. In addition to giving holders the autonomy to have their shares registered in their name, regarding shares through the DRS also reduces short sellers' availability to borrow GameStop shares. That is because, unlike brokers, transfer agents cannot lend shares to short sellers. And these are the shares that are registered with transfer agents in the millions. And as of Q4 2022, about 76 million. So that's quite a bit. About 20% of all GME shares outstanding are held beyond brokers and banks. So it says it does affect the trading volume, and you've kind of seen this in the monthly trading volume. But also when, if GME does have good earnings and it sends the stock up higher, it's going to be harder for shorts to cover on short positions. And that's, negative for shorts. It says it is impossible to say with certainty that GameStop's recent volume drop is due to investors using transfer agents to keep their shares away from short sellers, but we can say that if GameStop reports that more shares have been registered through DRS, retail shareholders could send the stock higher. And I think this is pretty in line with what a lot of us expect and what a lot of people think could happen with GME earnings. So their earnings should be announced right after the close today. Could be 5, 10, 15 minutes, but that net profit number is really going to be a key driver of these names. Now, if you do see good numbers and a good net profit, GME is trading where it was at the last earnings, right? GME had a high this day, $27 per share. The high you've seen today is $26.55 per share. If GME does report a net profit, the stock's probably surging to $35 to $40 per share almost instantly. And it just depends, obviously, what is said and all of that. But if you look at it, GME was just at $50 back in August of 2022. Sure, that's almost a year ago, but that's not that long in the grand scope of things. And considering where the markets are today, they're a lot higher than where you were in August. Just GME has really not kept up pace with the broad markets like a lot of other stocks have not done so as well. So you might see a big catch-up effect, and you could send the stock soaring. So that is why I do have a trade on GME. Also have a trade on AMC. I think AMC as a sympathy trade is really, the options are not pricing that in. So I think with AMC, if GME does have rock solid earnings, it does surge to $35, $40 per share. If it's just really strong like it was last quarter, AMC's going to surge to $5.50 to $6 per share. That's kind of my base case scenario on a 40% rally with GME, comparable to what we've seen last quarter. If it's bad earnings, I think AMC is not going to fall as much, obviously, because you've already fallen a lot recently. But if GME does have bad earnings, I would really target $20, maybe sub $20, just kind of considering where the stock traded after their last earnings. GME traded down to about $18 per share. So this is a very big earnings. And I expect a big move in either direction. Like, I don't expect a 5 or 10% move in one direction or the other. I firmly expect a 20 to 40% move in either direction. I think the upside move is likely to be higher than any downside move, just considering I don't think a lot of people expect GME to have terrible earnings, like to lose 50 cents a share or a dollar a share. That would cause like a 40% drop. But if GME does have bad earnings, it's probably going to be bad in line with expectations, and that probably still gives you a 10 to 15% downside move. So guys, that is going to do it here in this video. Thank you for watching. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day. And again, if you want to come trade with me live in real time, link down below in the description of this video. I will see you in the next one.